Welcome back. In this video, I'm going to be covering PayPal. This is a company that does financial services, and you probably recognize them by one of their apps, Venmo, which just about everybody has. But you also may know them because they do a lot of credit card processing, as well as you can have people that are both members and participants in PayPal. You can send money to one another. They're in a variety of things, and they really are a new generation financial services company. They have had a really rough couple of years if you look at their stock price, but I think there's a lot of value in PayPal. I like the fact that they're growing their revenues, and they announced their earnings about a week and a half ago, and I have a fresh set of financials. I could take a look at their financials, see how the business is doing, and I'm going to update my valuation of PayPal and see what I think the company is worth and make a decision whether I should buy more shares of PayPal, hold the shares that I own, or sell my shares in PayPal. Let me take you through my process and get to that decision of buying, holding, or selling PayPal. I follow a consistent process as I evaluate companies. It's 4 key questions followed by a decision to buy, hold, or sell. And the first question is, do I like the company? Do I want to be a part owner in the company? And do I like the industry? Do I think the management team is operating the business well? Do I think debt is less than 3 times EBITDA, and therefore it shows that it has a strong balance sheet? And am I getting a discount on the stock? Because I want to buy a stock when it's low and see it go up in value over time. And based on the answers to those questions, I will buy, hold, or sell. PayPal has been in business for over 20 years, and they have really grown their portfolio of services they provide. And most notably, the peer-to-peer functionality they have where people can pay one another. That's always been there. But they also do checkout services. So you might find a website with PayPal on it so you can check out using PayPal. They definitely process payments. They have Venmo, which is a peer-to-peer platform. That's really popular. And now they're beginning to do a lot of buy now, pay later, which is a pretty hot section to the market. Now, I would be the first one to say, I don't know if it's going to be profitable. I don't know if it's more risk than it is value, but it certainly is growing. And it's either going to create more value for PayPal or it's going to be a big problem. We'll see how that plays out. But overall, PayPal is a mature company. They keep growing, and I like that about the company. The earnings release came out, and let me review a couple of the highlights. First, revenues are growing by 9%. Very good to see. PayPal is already a pretty big company, so it's really good to see that. Earnings per share looks really good. It looks really good in the third quarter of 2023. And if you look at 4 quarters going forward, it looks very good. So I'm going to take the forward 4 quarters of earnings per share and put that into my valuation based on earnings per share. The company's been buying back a lot of shares of their stock, which is good because their stock's down in price. So that's really helping really create value for investors in the form of making each share more valuable since you're taking a lot of shares off the market. The balance sheet looks good for PayPal. They have a lot of cash and really are a cash generating company. So I'm going to look at cash flows as part of my evaluation as well. One thing that happened that is a concern is the whole buy now, pay later business really made a dent in free cash flows. So the company PayPal is running that business, but what a company usually does is they sell off that debt, and they've made an agreement with KKR that they're going to sell a lot of that debt to them, but it's not going to happen for another quarter. We're not going to see that happen. So when I looked at their cash flow, it actually went down significantly, and it was because of this impact of the buy now, pay later business. PayPal is having to hold a lot of that debt, so it's taken away from that free cash flow. So that's a negative in my book. Let's take a closer look at the statement of cash flows. Earnings have been really good. If you look at earnings for the first 9 months, they're actually quite a bit higher than they were for the first 9 months of 2022. So that's looking good. But where the trouble begins is in the whole, buy now, pay later business is causing PayPal to have to lend out a lot of money to make that business function. And they're not selling off the debt quick enough. So it's creating a negative cash flow item on their cash from operations to the point where it cash from operations for the first 9 months is down $2 billion. That's a lot for PayPal. So that's a problem for me. They have to get this back to where they normally operate, because that's what my valuation is based on. I value companies on free cash flow and their earnings per share. And this is going to have a number that's lower in the free cash flow starting point, which is going to affect the valuation of PayPal. I believe that PayPal is discounted by 25%. I think each share is really worth about $71, but the stock market will sell you shares at $56.82. I value the company going two methods. One is valuing the free cash flows that I expect the company is going to produce, and two, valuing the earnings per share the company is going to produce in the future. Let's start with free cash flows. I annualize the number for the first 9 months of the year and have a good starting point of $2.3 billion. I'm going to grow those cash flows by about 10%, and hopefully they get that buy now, pay later business rectified, and they can grow those free cash flows. And then for the terminal value, I'm going to grow those cash flows by 3%, getting to a terminal value of all cash flows after year 4 equal to $81.5 billion. I'm going to discount PayPal by 9% as a weighted average cost of capital to get to an intrinsic value of $61.7 billion is the value of all those free cash flows. They have more cash than they do debt. Very good to see. I add cash and take away debt from the valuation to get to an equity value of $66.6 billion is the value of PayPal. But the market cap's $61.2 billion. And that causes just a 2% discount if you look at the free cash flows. Earnings per share looks really good. I think the company is nice and profitable. A PE24 is reasonable for a company like PayPal that is growing. And based on the valuation of earnings per share, discounting those earnings per share, I think each stock is worth $97 if we value it based on earnings per share. Shares are being sold for $56.82. So there's actually a nice healthy discount of 71% using earnings per share method. I combine the two, but I put more weight in free cash flow. It's actually 2/3 of the value of the company in a blended model is from free cash flow, and 1/3 comes from earnings per share, getting me to that blended 25% discount on PayPal. The balance sheet's in good shape. If you look at their net debt is 0, but even when you compare debt to EBITDA, it's 2.46. So the balance sheet's in really good shape. Looking at where PayPal has traded over the last year, it's not a pretty picture. It's gone down significantly in the last 12 months. It's down 24%. If you look at the 2-year chart, it's even worse. But, you know, valuable companies that are counted out and the stock price really goes down, it's an opportunity to pick up shares, usually at a good value. So I'm not afraid of doing that. There is a little bit of a discount available on PayPal. Now, the discount's there, but there's some other circumstances that are making me feel a little awkward about the stock. So I'm going to take that into account, as well as the discount that's currently available. So should I invest any more of my hard-earned money into PayPal? Let's take a look. First, do I think the company is a company I would want to own? Do I like the industry? And the answer is yes. I have a lot of respect for PayPal. I think they have good products, good markets. They have very good clientele. The business is operated by a good management team. Debt is well below 3x EBITDA. But the discount's not high enough. I want a higher discount. There's some moving parts to PayPal that we need to see resolved. I want to see the whole buy now versus pay later business, get a little more mature. And I don't want to see it take a lot of cash away from the business. I want to see it, I want to see it grow. I want to see it be profitable and not have a negative cash impact. Therefore, I'm going to be just holding my shares of PayPal, giving it a quarter or two to really show me that they have the business figured out in order for me to raise my valuation of this company. That's my video on PayPal. I hope you found it interesting. Do me a big favor and leave a comment. I'd love to hear what you think about PayPal and where you think the company is headed. Thanks again for watching. Good luck investing.